Hello everyone and welcome into the channel. My name is Brent, and in today's video we're going to go ahead and take a quick peek at last week's changes on the week. What made the market pop up higher for the 7th to the 11th of April 2025. We'll go ahead and take a look at some individual company performance on the week to kind of showcase, are they still in fear of going down lower, or do they find a bit of a bottom and rallying point moving forward? We'll take a look at the Asian markets as well, as Japan, China, Korea have opened higher on the day. So we'll go ahead and take a peek at that as to why that took place. We'll take a look at pre-market on Monday, going into Monday, how Asian markets are affecting positively on open on Monday. We'll take a look at both recessionary treasury yields, some snapshots of data that could potentially be negative, but we'll have an article as well, kind of being positive on the positive side, and then kind of talk about earnings happening this week from the 14th to the 18th of 2025. So with that said, let's go ahead and get into the video. Yeah, don't go down, don't forget to go down below, give this video a thumbs up. So right now, like always, start off with the fear and greed index. We've moved higher than we were in the past at 4, but lower than I believe we were earlier this week at a 17. I think we were at near 16, 17. Right now, we're at a 13, which isn't bad. We've actually moved higher than I expected. On Thursday, we were sitting right splat in the middle at 525, with the chance of going higher or lower from there. The mid-level highs was 5,500, and the lows were at about 49.82. So I'm going to say 5,000 and 5,500 were kind of the lows and highs. Now we ended up being stuck at 525 with the potential to go in any direction to either retest lows, retest that 200-day moving average. Right now, it seems like we're on our path to hit that 200-day moving average, which we'll showcase here shortly. This is the 125, but we'll more than likely hit that 200-day moving average, retest it. We could be resisted, bounce back off, and retest these back lows, or we could break through depending on what kind of news takes place. In this market, it's very uncertain as tariffs go back and forth on a day-to-day basis, or get paused, or make some new announcement. So, it's in everyone's kind of guess as to what could be taking place. As far as the Friday goes, Dow Jones was up 1.56, that Nasdaq was up 2.06, and the S&P 500 was up 1.81. We did see on Friday that Apple had the biggest pop out of the main 7. That was because of the announcement that there would be a pause on China's tariffs, as well as tariffs on specific consumer items from Apple, like semiconductors and other device related items. There was a lot of news last week where when I was scrolling through social media, there was announcements such as iPhones to be, instead of $1,000, they would retail for $3,000 or $3,500. So they were making these really high exaggerated, announcements. I don't believe that they would get that high, but who knows? I don't follow along that closely on the price of these tiny little items, but who knows, right? So Apple popped Friday because of some news, moving up 4.06, Amazon 2.01, Google 2.59, Nvidia 3.12, Microsoft 1.86. We did see Meta and Tesla both negative on the week. And over here, consumer defensive, these on Friday, we had Walmart moving 2.42, Costco about flat, but on the week performance, take a look at these consumer defensives. Walmart was up a whopping 11.55%, Costco 5% on the week. We also saw financials popping higher very nicely. Financials such as Goldman Sachs are due to do earnings here on open on Monday, so we'll see some of that as well. You see throughout the week, the Mag 7 was very green, with NVIDIA, skyrocketing, almost double above anybody in second place of almost 18%. Microsoft 8, Apple a little over 5, Google almost 8, Meta 8, Tesla 5, and Amazon 8. So really good performances overall on the week and the majority of the market. Although we see down in healthcare and oil, that healthcare was pretty much all across the board down. AbbVie down 6.37%, Pfizer 4.62, Bristol Myers 8.3, and Merck down 2.1. Just big across the top. We also saw residential construction going down. I'm not sure as to why this came down. And that could have just been where tariffs on semiconductors and those electronics were kind of cut. But I don't know. I thought that was interesting that these are down so much on the week. So I didn't do a quick dive into these as to, residential construction being down, oil and gas as well, kind of negative on the week. Now popping over into the markets, we can see for the 5-day, we kind of already saw the performance on the 1 week. Oh, no, we didn't really check it out. But on the weekly performance, we saw the Nasdaq up around 7.5%. It did break highs of 10% on the 10th. So on Thursday, after the announcement that tariffs would be paused, the stock market just shot up by 10% on the Nasdaq. It was just insane to witness. Within 30 minutes, I checked the indexes, and the Nasdaq was up 7%. S&P 500 up 7%. And then they ended up Nasdaq up 10%, S&P was up around 7 or 8, Dow Jones was around 5, and then throughout, they did come back down to that mid-level between on towards the intraday and open on Thursday, but stayed strong throughout the end of the week. So that was very good. Now, as far as where they are at year to date, 200-day moving average is the one that we want to kind of take a look at on their pricing to kind of see where these are at. Not all at once though. So as far as what they're kind of looking, there are some negative talks out there as far as the death cross within the S&P 500. Also, when looking at Treasury yields, it is looking like an indicator that we could go into a potential recession. There's recessionary markers out there, so we'll go ahead and showcase that. S&P 500 is still showing signs of a death cross, but if we can break above 550 and keep it, keep trending higher, right? But there's still a lot of uncertainty. So right now it's looking still mid-level. We can go higher, we can go lower. I'm thinking we'll slowly move higher, hit that 200-day moving average. I think we'll actually come down off of it, bounce, and then retest, not lows, but retest somewhere near lows because of the uncertainty that's out there. There's no reason for us to just straight move higher. There is a lot of the tariff news is kind of just now China and US. All the other countries are getting that 10% base flat tariff. So unless, some other country or multiple countries has some negative news or some negative announcement, I don't know if we'll drop below that current mark in the sand. But we could definitely kind of bounce in this range a little bit, test that 200-day, come back down a little bit, and then go back to being higher. So Dow Jones, I believe this is kind of like the same. You can see here also almost at a death cross, but not quite. The Nasdaq, I believe, actually fell. Nope, it's still basically just barely above that 200-day. And then when we take a look at the individual companies, we did see Microsoft, they found their bottom here. It looks like finally around 360, they found that bottom finally with the support of that tariff relief mint. They've actually been on the downtrend negatively for quite some time, hitting lows of 358 before popping back higher. They're still showing that death cross here, right? And they had no end in sight, as we had said prior. But here recently with the announcement last week, I think they finally got their line in the sand and they could begin to bounce. But we'll see how they move past the 50-day and make their way back up to the 200-day. Amazon here, quick look. Not quite at anything negative. I've actually considered taking some portion of funds from the Roth IRA, selling portions of the SPY or VU. I'm invested in VU. And moving them into Amazon and Meta, just two pieces, $10,000 sold off from VU, moving them into Amazon for the long term, and also Meta as well with, the drop for Meta from being over $720 to now $543. This is a huge drop, and they didn't really. I feel like they're not negatively impacted by any sort of tariff news out there. So it's just crazy to see Meta being dipped so low there. Apple, we did see that this one actually death crossed here shortly, but all of these has basically found their line in the sand that they'll probably more than likely, if anything does happen, they'll just come down and retest those lows and then move higher. Because despite the death cross here, there is a kind of line in the sand now as to where they'll stop, where investors will feel comfortable buying them in the future if there's any sort of pullback going forward. So Google here at 159, not super high off those lows, but they've also death crossed there as well. Nvidia, we already kind of saw that way back when kind of take place. And then Tesla. Tesla still has some room to grow. Oh, wow. They've dropped down quite a bit since we last saw them. It was only a week ago where Tesla did not seem they would be crossing here, in the short term, but they are soon to be crossing within the week if they are not able to get that going. Now, talking about stock rallies over in Asia, I did get this article here kind of highlighted some positive mid news. So Wall Street futures in the US, tariffs have been delayed on some electronics. So they've delayed some tariff news on electronics. Confusion in the White House might still come out as far as like what percent, what will actually be tariffed, what will not be tariffed, what percentage will these items be tariffed, right? Dollar treasuries vulnerable and loss of confidence. We did see some sellage in the treasuries. We saw that yield move higher on the week. A lot of investors thought it may have been China selling out of treasuries, but I believe, don't quote me on this, but I believe it was Japan that had been the ones that were selling. And then here we saw major stock indices bounce on in Asia on Monday, and Europe looked set to follow after the White House exempted smartphones and computers from reciprocal U.S. tariffs through gains were limited, as President Donald Trump warned levies were so likely to happen at some point. So, they've exempted some smartphones and computer devices. Trump on Sunday told reporters tariffs on semiconductors would be announced over the next week and decisions on smartphones would be made soon. So they paused it, they exempted it for now. That kind of pause that caused the market to move higher, but there could still be some tariffs announced, some decisions being made in the next week, and that could negatively impact the market. So I kind of marked that in yellow. On the face of it, the exemption of 20 product types, accounting for 23% of U.S. imports from China, was a boon to manufacturers. That's the reasoning for Apple kicking off on Friday. However, the off-again and on-again trade policy has left investors confused and analysis bearish on the long run, right? Nobody can get a clear understanding of what exactly is supposed to happen, what is fixed in stone, what's gonna take place. Everything is teeter-tottering. It's going back and forth, on again, off again, on again, off again. There is still a 10% universal tax. It's still a very large shock, and the huge 145% tax on China is prohibitive. He added, you cannot stop trade between the world's two largest economies and not expect damages everywhere, which is true, right? China and US are the largest economies, and tariffing countries in this kind of open world trade is, it's kind of a double-edged sword a lot of the times. But we did see the SPY. So taking a look at, we'll take a look at that here in just a minute. There was another article here kind of talking about Asian markets. So we saw Japan, the Nike rose 1.8%, South Korea gained 0.8%. They talked about some individual companies here. The Hong Kong jumped 2.4%. And the Shanghai Composite picked up 0.9% after the government reported that China's exports surged 12.4% in March from a year earlier, right? Of course, they're going to have really positive numbers year over year because tariffs, it's accounting for last year's versus this year's right now. And then if we take a look here and we take a look at the world view, oh, BABA was green when I looked at them last. Holy cow, they went down quickly. So when I had seen them earlier, I'm pretty sure they were positive. But we can see Baba. Alibaba. Well, it shows 3.41% on my other screen. I'm not sure how accurate. This should be fairly accurate. But I thought I had seen China positive there. We saw India, Taiwan, Japan. Japan was very positive. But yeah, when I take a look at, when I just typed in Baba here, it shows on the 1 day 3.41%. I'm not sure why this is showing 7.56. And then if I type in ED stock, it's showing up 2.43%. So yeah, I'm not sure why these are showing negative. So that's kind of interesting. But overall, Asian markets are positive, which positively affected current pre-market. We do see Dow futures are up 0.77, S&P 500 up 1.28, Nasdaq up 1.71. So Monday is looking to be positive, starting positive there on Monday. And right now, with tariffs being kind of paused globally, and then China's tariffs being paused a bit on specific stuff. Where is it? On semiconductors and electronics. With those kind of the computers and smartphones is what percentage was that? 23% of U.S. imports. So there's still some other stuff out there that could be negatively affecting. Now, talking about the recessionary kind of outlook. So really quickly, Treasury notes here rose fairly sharply here just in 2025, just within the last few bits. So we did see the 30-year note is at a 4.85. Now, one of the charts down here that I was looking at, I'll have the comments here, and I'll have this article down below. So if you guys would like to read it a bit more, the inverted yield curve is an inverted yield curve is when the long-term treasury yields are lower than the shorter-term counterpart. This next chart displays the latest 10-2 spread. Typically, the spread turns negative for a period before rising again prior to a recession. As illustrated in the 4 recessions shown on this chart, for this reason, the 10-2 spread is widely considered a reliable leading indicator for recessions. The lead time between a negative spread and the onset of recession varies, with the recession beginning anywhere from 18 to 92 weeks after the spread goes negative. One false positive was seen back in 1998, where the spread briefly went negative without leading to a recession. In the case of the 2009 recession, the spread went negative multiple times before rising again. Most recently, the spread was continuously negative from July 5th, 2022 to August 26, 2024. The last time the spread was negative was on September 5th, 2024. So if we consider the first negative spread date as a starting point, the negative lead time to the recession is 48 weeks, or about 11 months. If we instead use the last positive spread date before recession, the average lead is about 18.5 weeks, or about 4.25 months. So right now, as we've seen in prior history, there was the negativeness, between the 10 and 2-year spread, and then soon after, what was it? It said about 4.5 months after, we went into some sort of recession. So here, they kind of showcase it was back in 1998 where it popped, but it didn't actually take place, which would have been right here. No recession was seen, but in every other instance, it hit here, recession in the 1998, and then hit here, recession in the 2000s, that Y2K. Then we popped in 2006, and we saw the recession in 2008. And, briefly, even back in 2020, prior to the sickness in 2020, it popped as well. We had that brief recession. And then look how long this has been taking place, right? With the most recent time it hit was back on August 26, 2024, right? If we take a look, at 4.25 months forward, that would put us into 2025. Well, it even said here the last time was negative September. That's 9 and 4 to be January, February time period. So I guess we'll just have to see. But the inverted yield curve has been a pretty good indicator of a recession being in the economy. So we'll see if this kind of plays out. I have this article down below. There's a lot of information here, but I just kind of wanted to cover this one here briefly, as this kind of, I figured, be kind of nice, positive or negative. As far as positive stuff goes out there, we have Craig Johnson. He isn't deterred from his bullish outlook despite soaring market volatility. Piper Sandler also has expected the S&P 500 to surge to 6,600 by the end of the year. He did have some, you know, remarks here as far as, against the negativeness and kind of move in his views positively, right? With the S&P 500 down more than 10% in two trading sessions last week, predictions of the worst case scenario wash over Wall Street. Strategists across various Wall Street banks warned of imminent recessions, right? There's a lot of chatter of recessions being everywhere right now. And the lower stock market did returns due to Trump's sky high tariffs, but this is mostly against China, and it's still in place right now. So we'll see how that kind of plays out. Craig Johnson, chief market technician at Piper Sandler, saw this as an opportune time to reiterate his view that the S&P 500 would finish the year at a fresh record of 6,600. That represents a potential upside of 22%. And, don't stop believing. It's only April, right? We're only 4 months into 2025. That leaves 8 additional months where anything can happen. But as we saw, he did point out that it all hinges on Trump's administration. They've been backpedaling some tariff initiatives played out on Wednesday when Trump instituted a 90-day pause. And then on Thursday, Friday, with the pause on smartphones and computers out of China. And then highlighted again some below. Negativity is just kind of running so high. As we saw, there's a lot of fear out there in the market, highlighting that recent flow data showed investors selling stocks and buying money market funds. I don't know what kind of investors out there buying money market funds, selling out of their stocks. And when negativity gets extreme, so this is the positive. I kind of highlighted this as positive. When there's a lot of negativity that's this extreme, right? There's investors running to money market funds. It typically serves as a contrarian indicator that stocks are poised to rise. If you're going to be emotional in the market, you will lose every single time. You can't be emotional about it. You just have to come in and you've got to buy. I don't know what it says here. So it says you can't just be emotional about it. You have to come in and you've got to, when people are vomiting up stocks, you got to be in there cleaning it up. So yeah, that was an interesting one right there. So a lot of people are selling out of right now, right? He's just saying you got to be in there just kind of scooping up those shares at these low prices when everybody is selling out of them, because he still believes that there's a 22% upside in this market. It really depends on tariffs, right? And there's still a lot of uncertainty. So lot of uncertainty out there in the market. But what's to be expected this week? We'll end it here with the upcoming stuff on Monday. We're going to have the main one is Goldman Sachs doing pre-market. Let me see here. Did I miss anything up here? We have several large financial firms set to report earnings this week, including Goldman Sachs. Investors are expecting quarterly results from Netflix. Netflix, I think they'll kind of mention here that they're not going to be reporting their new subscription numbers, I believe. This week is set to bring updates on housing starts, retail sales, and home builder confidence. So let's take a quick peek through here. If you guys would like to pause the video, if there's any of your favorite companies out here that are doing earnings this week, such as Johnson & Johnson. I did see Netflix, I think it was Thursday. Let's take a look here. Yeah, Netflix is there on Thursday. And then Friday, a few little things set to go on. So I didn't highlight anything in this article, I'm pretty sure. It's just, big banks are set to report earnings. They already popped pretty high this past week. And we are going to get retail sales data for March, and housing market data is coming in as well. I think, Thursday, Netflix. Netflix is scheduled to report on Thursday, comes after the streaming giant reported strong revenue gains and raises 2025 revenue forecast in the previous quarter. This report is expected, or the report is expected to be the first where Netflix doesn't provide subscriber numbers. So subscriber numbers, I believe they topped over 1 million. So they're not going to be, was it 10 million or million? I think it was 10 million. I believe they just kind of broke over 10 million. Oh, wow. Never mind. I'm way off. Netflix reported 301.63 million paid subscribers worldwide. Okay. And then US and Canada's nearly 90 million, it looks down. I don't know how old that data is, but okay. I was way off. Don't listen to me. But they're not going to be providing their subscriber numbers anymore. Okay. So that is all I wanted to cover in the week to go. Honestly, I think this week for the 5th, oh, it's now 14th. Yeah, 14th to the 18th here on this week. It could move to the upside. I'm not seeing much negativity out there with tariffs being paused. China's tariffs on smartphones, computers, that was the main kind of drag on so many individuals than the consumers being kind of lowered. And, there's still going to be that back and forth. But unless something out there really shocks the market negatively, I don't see us retesting those lows. That was like worst case scenario where all countries are going to be hit with tariffs. China's going to be hit with tariffs. Everyone's being hit with tariffs. That's not happening anymore. So we kind of found our floor as far as where we can hit potentially negatively. And we're not going to retest that low because we don't have those same situations happen anymore. So at the very least, we may come back down to around 525 on the SPY. When just looking at SPY, we could potentially retest like 525, 520. We'll hit that 200-day moving average. We might bounce back, retest that 525 before we move higher. That's kind of the outlook kind of moving forward for me, unless something else changes. But anything can change on the hour, basically in the 30-minute frame, in the hour, in the day. So just kind of keep your head high, buy more, and accumulate more shares. That's kind of the thing. So that's going to be it for me, guys. Let me know down in the comment section below. Are you guys buying, selling, acquiring anything specific? I hope everyone did their taxes, and I hope you have a great day. Bye-bye.